Loop Capital making it a top pick for 2025, saying it may be unloved, but there are several clear catalysts ahead. Let's hear what Alan Gould has to say about this. He's managing director at Loop Capital Markets, covering media and streaming. Bit out of consensus here. Alan, do tell.
Hi, Kelly. Nice to see you. I think there's a number of catalysts that are going to occur for Comcast this year. I mean, we know that they've got the media division's going to have the cable spinoff. Epic Universe, the domestic theme park, largest domestic theme park, will open in Orlando in May. The NBA will move to Comcast later in the year. And there should be consolidation in streaming and also in possibly the linear cable networks and the SpinCo. In terms of broadband, which is 2/3 of revenue, a higher percentage of the EBITDA, the stock has been punished because broadband subs have been declining. The decline's been worse than the street has expected. We don't know when the sub declines are going to stop, but we do know you're not going to have a regulatory issue like the loss of ACP that you had in 2025. More sports, more entertainment programs going to streaming. Therefore, broadband consumption has to go up. Comcast is upgrading its plant and doing it all within a very 10% capital intensity envelope. So upgrading real efficiently. The vast majority will be upgraded by the end of the year. We think at these valuations, Comcast is trading at a lower forward EBITDA multiple than its peers, close to its all-time low. There's very little downside in our opinion. Any sort of hint that broadband sub growth starts coming back, I think you'll have both a revaluation in addition to the higher EBITDA.
Fair enough. There's obviously a lot of bad news priced into the stock, which has gone nowhere for 5 years. But I look at the strategy, and maybe we can compare it with AT&T, which finally divested of all of its media assets and was up 50% last year. Or you could even compare it with Fox, which has stayed in the kind of sports and news business with a free streaming app, I believe, and also saw its shares of 50% last year. Comcast kind of split the baby. They're keeping some of the media stuff. They're keeping the money-losing kind of streaming product. They're not doing the free ad-supported route. And so, therefore, I don't see them benefiting from either strategy. They kind of have a foot in each world, and I think investors don't know what to make of it.
Well, a little differentiation between the two. They did not overpay for the assets like AT&T did for DirecTV or arguably Time Warner. In terms of Fox, Fox is mostly sports and news. And if you look at what Comcast is doing with spinning out most of the linear cable networks, it's retaining the sports within NBCU and within Peacock. News, I realize CNBC is part of the SpinCo and MSNBC, but NBC has the news there. And let's see what happens here. I think the SpinCo is a first step in starting to separate things. And then, as I said earlier, I think we'll see some consolidation and some rationalization.